It looks like Wall Street has a rally on its hands as the White House tries to downplay reports that it wants to delist Chinese companies from U.S. stock exchanges. Let's get a view on what this all could potentially mean for financial markets. Joining me now is Yousef Abbasi. He is the global market strategist at INTL FCStone. Thanks for coming in.
Of course, it's a pleasure.
So I know that the White House is downplaying the reports that came out on Friday, and this is all hypothetical, right?
Absolutely.
But if the White House was to seek this delisting of Chinese companies, what would that mean for financial markets?
Oof. I mean, it would be pretty tough, but this is clearly a shot across the bow from Trump to China. And I'm wondering if it's because he's concerned that China may be more willing to sit back and watch how impeachment proceedings or the query plays along. But in terms of what it would do to financial markets, in my purview, right, we're talking about you have a billion, it's a trillion. It's actually, the numbers on the listed Chinese domiciled, it's around 890 billion. And that doesn't even take into account some of the other OTC traded. So you're talking about nearly $1 trillion of market cap in the U.S. trading for Chinese domiciled companies. It juxtaposes it directly with the $1 trillion and change that they own in U.S. treasuries. So I think Trump is reminding China, hey, if this trade war were to go further and there were going to be financial strings pushed and pulled, we've got the similar amount of capacity and size to impact your markets as you do ours. Now, the other question is the U.S. investor. U.S. investors have generally been owners and holders of Chinese tech companies that have shown promise of growth. So now a U.S. investor has to somehow manage to retrace and retrench, and a mass exodus like that could cause havoc in this market. It doesn't take much to cause a beta unwind, and something like this would certainly create an unwind.
So is the fear repercussion? Is that what the fear is? Is because China is the second largest holder of U.S. Treasuries in terms of foreign governments. It's about $1.1 trillion on our last record. Is that what the fear is? That they could unwind that rapidly, which would push interest rates significantly higher?
So the interesting part here is just thinking. Let's think about the U.S. part, right? If U.S. investors were now required to exit their stakes of Baba and Tencent and all these Chinese JD, you nail it, right? So if we were expected to exit those, think about the hedge fund community that would now have to exit those positions and deleverage off of them. So that's one side of it. The other side of the equation is if we start to play the trade war at the financial level, then China can respond. And what we've seen so far is U.S. dollar-denominated deposits abroad, U.S. dollar funding abroad. There's still a good deal of demand for it, right? So if you now have China out there selling treasuries and sucking up dollars, it's going to take more dollar out of the global financial system. So you might see some more indications of stress in the dollar-denominated markets. So that would be my broader concern on both sides. On the tech and China stock being delisted, U.S. investors will obviously have to unwind their positions. That can cause a risk-off move in equities. And then on the broader side, what does China potentially selling U.S. treasuries or even Fannie and Freddie paper mean to the dollar-denominated funding markets?
So if we saw some kind of response and it impacted treasuries and then it also impacted the dollar, what would then be the follow-through for the stock market? Because it seems like right now here in the U.S., right, we've been kind of insulated a bit. The U.S. consumer has been holding together the U.S. economy, right? So if you get a spike in interest rates and things get wacky with the dollar, then what does that mean for the outlook for corporate profits? And this is all hypothetical.
No, of course this is all hypothetical, but it takes us we're currently climbing a wall of worry. This would make the wall face look much more arduous, right? It would all of a sudden be, it would be massive. It would be very, very tough for the market to continue to rally if all of these things happened. Again, China potentially selling treasuries would suck dollar out of the system. Now European banks who need to borrow in dollar would have a harder time finding that dollar, potentially have to pay higher rates for that dollar. The New York Fed might have to increase repo sizes. They might have to start doing dollar. I mean, I'm going to this point on dollar-denominated funding because if you look at the traditional LIBOR OIS spread, which is an FRA OIS spread today, a forward rate agreement spread.
All right, you just got nerdy on me.
I did. It's still significantly elevated from where it has been in the past. It's at levels we really haven't seen since the sell-off in December. So my warning would be, if something like this happens, considering where the markets are and the stress around dollar funding already, you'll see more of that. The dollar will appreciate further. It'll be a negative impact to U.S. stocks.
So we should be clear, the U.S. Treasury, a spokesperson or someone from the Treasury came out over the weekend and downplayed the reports. We had Navarro on TV today downplaying the reports again. He actually called it fake news. So I'm wondering what, if from the market, from a global market strategist point of view, what do you think, if there were sources that floated this story out on Friday, what was the intention?
I mean, this is an interesting question, because for about 2-3 weeks now, we've had a complete détente with China, and it's been very purposeful. China's very strategic, right? They came out and they said, Hong Kong, we are going to make sure everything is okay for the next few weeks, because we want our Golden Week to be a massive celebration of prosperity and sovereignty. So we can't really have protests going on, and by the same token, we can't really be going back and forth on trade war. So we've had a relative détente. It's been pretty quiet. This gets floated on Friday. Again, it almost feels like it's a combination of distractor against what is going on in presidential politics in the U.S., and also, it may have been the White House thinking, we have to keep China engaged, we have to keep them at the table, where can we go that we haven't gone before?
Great, thank you.
Excellent.
Yousef Abbasi, he is the Global Market Strategist at INTL FCStone. I'm Conway G. Gittins, and this is Reuters.